I'd like to welcome you all. And again, my name is Terry Hecker. I'm the Wellness and Benefits Consultant for MCW. And one thing I want to make you all aware of is for the Q&As. Mark is going to start the presentation shortly and walk through clearing up the Medicare confusion is our title today and our session information today. And you can post your questions in the Q&A. And then what we will do is go through those questions at the end of the session. That just helps us manage those a little bit and make sure we get to all of the different questions that you may have. So I'm going to hand it over to Mark and we'll get started this morning. And as I said, if you have any questions, just type them into the Q&A and we'll be sure to get to those at the end of the session. So I'm going to move the presentation over to Mark so he can kick it off here. Give us just a minute.
We're in green room. I'm here.
No, we're not.
Oh.
Okay. All right, Mark, you are the presenter, so you can take it from here.
Okay, thanks, Terry, and good afternoon to everybody. It is great to be with you over the internet. I would much rather be with you in person, and I've done that the last couple of years and have really enjoyed coming out to the medical college and getting to know some of you. And but in light of the situation, this is today's world, and we'll do this virtually and hopefully educate you and equip you with making one of the more important financial decisions that you might make in your lifetime, and that is to decide how your health care is going to be structured in your retirement. And obviously we have one of the largest government systems to partner with in order to make those decisions and run the coverage through. And so understanding that system and what decisions, what options you have within that system are, like I said, one of the more important decisions that you're going to make with your future and your financial life. So I am going to move this over so that you can see my slide presentation, and then we'll get that started. So I believe now that you should be able to see the slide presentation on Medicare. So we're going to walk through this today, and please do ask questions or pass along comments or whichever, because I think that's one of the best ways to learn and to address some of those situations that you're thinking about. So pass those questions on, and I will do my best to keep us on time, but also leave time for that at the end. So what is Medicare? Medicare is a national health insurance program, and it is designed for people over or at age 65 to be able to start up with Medicare and to have that type of health coverage as you go into retirement. It is administered essentially through the Social Security Administration, so that's where sign up happens through that system as well. So it definitely works hand in hand with the Social Security Administration itself. It is for all U.S. citizens over the age of 65, and there are also legal residents who do qualify that have lived in the United States continuously for more than 5 years. But there are some people who are eligible for Medicare before age 65 if they qualify for Social Security disability benefits, and so that coverage can begin sooner as well. Okay, a lot of us are familiar with Medicare and maybe even familiar with some of the terms of Medicare when we talk about Part A and Part B and so on, but what really do all of those things actually mean? So Part A is simply hospital insurance. So Medicare started with Part A, especially to help Americans going into retirement And the whole idea here was to keep them from facing a financially catastrophic situation in light of a major health event. So Part A was never designed to be a comprehensive healthcare strategy, but to protect Americans from literally having their retirement blow up with a major hospital-type healthcare episode is the way Medicare originally started, and that's Part A. So when you're on Medicare and you have to go to the hospital or have a stay in the hospital for a procedure, it is Part A that addresses that. Part B then came along because this is where more Americans spend their time going to the doctor for regular doctor visits, smaller procedures, and so on. And so Part B was created to provide coverage for that type of activity in going to the doctor on a regular basis for various things, not just regular checkups, but other procedures, as I mentioned. I'm going to skip over to the right then. Part D was added, and actually that's the newest part of Medicare, where Medicare during the Bush administration, which would have been around 2005-ish, where Medicare Part D was created because a lot of retirees were having their retirements blow up because of what they were spending on prescription drug benefits, which weren't covered under Medicare prior to that point. So Part D is insurance in order to help you to pay for your prescription drugs that you might need. I skipped over Part C because that's also commonly known as Medicare Advantage, and we're going to get into that actually as we move forward here. So I'm not going to explain that as much in detail because we're going to look at that in here. One of the first decisions that you need to make as you start your Medicare plan is to decide whether you're going to go ahead with Original Medicare, which is on the left-hand side, or you go with Medicare Advantage, which is on the right-hand side, also known as Part C. So, what is Original Medicare? Part A of Medicare, your hospitalization coverage, is really automatic and it's also free. You don't have to pay anything extra for Part A, so there is no decision that really needs to be made there. You go on Part A Medicare coverage once you are age 65, or you might delay it, and we'll talk about that in a little bit. But Part A, it's not really a decision whether you should have it or not, because there really isn't a reason not to have it once you are eligible. Part B, although the vast majority of Americans do go ahead with Part B, but there is a cost to it. So you do have a decision as to whether you want Part B or not, although to put it simply, the benefit of Part B is certainly worth the cost of the premium, and we will look at that in a moment. So, Original Medicare, you already go with Part A. You can choose to add Part B, but if you go with both of those, you can choose to add Part D, your prescription drug coverage, but you are not forced to go with Part D, so that is up to you as well. You cannot get Part D unless you have both Part A and Part B as well. That's added on. Now, if you have A, B, and D, you still might have a decent amount of money that you'd have to pay for out of pocket depending on your medical conditions, and that's where Medigap comes in, although I think most people know that as a supplemental insurance policy. So the supplemental insurance policy is an add-on to these things to cover a lot of deductibles and copays, so that once you have a supplemental insurance policy, there probably are not too many surprises, and anything that you might be going to the doctor for within a reasonable scope of treatments, then you're pretty well covered with all of these things, A, B, D, and a supplemental insurance policy. In fact, I tell a lot of my clients actually that if they have all 4 of these, you probably have as good, if not better, insurance coverage than you might have had during your working years, although I'm familiar a bit with your policy or your coverage at the medical college, and you certainly have very good coverage there as well that a lot of people would love to have. So original Medicare is taking A, B, D, and probably a supplemental policy, and then you're pretty well set as you go into your retirement years. However, Medicare Advantage on the right is another way to address this. In fact, what happened, I think around 2004, is Medicare Advantage came along where the government even worked together with private insurance companies to come up with this concept where Medicare Advantage is really being purchased and administered not necessarily through the Medicare system. It's done more so through the private health insurance industry system. So the government said to private insurance providers, look, we're wondering if you, the private insurance industry, can come up with something that actually might even be a little bit more efficient and might even be a little bit less expensive for people. And we have a number of guidelines that you need to do in order to put these policies together, but see what you can come up with, and then we'll give that as an option to people. I'm paraphrasing that, but that's kind of how the conversation went. And so then Medicare Advantage was created. And what Medicare Advantage does is you still have Part A, you still have Part B, so you cannot have Medicare Advantage without having Part B, but then you buy a Medicare Advantage policy that then you don't need to buy a separate Part D policy, nor do you need to buy a Medicare supplement policy because you would be going with Medicare Advantage. What is the advantage to that? The cost of Medicare Advantage for its premiums is considerably cheaper. So I might as well get into that a little bit now. Right now, Part B costs $144 a month. It's $144.60 a month. And actually, and this was a little bit sobering coming into 2020, but that was up, I think it was close to 8% compared to 2019. So that was a pretty big bump up. So an individual that's purchasing Medicare Part B, it's costing them this year $144.60. Part D commonly costs close to about $40 a month, and there's all sorts of different Part D coverages that private insurers put together. And so that depends on the company that you're going with to buy Part D, which is supplemented by the federal government, but you don't actually buy Part D through the government, you're buying it through a private insurance company. So Part D, like I said, can oftentimes cost about $40 a month, although I was just working with a client this week that got a Part D policy for about $13 a month. That's probably the lowest that I've ever seen it. Now, Medicare supplement policies, if you're going with original Medicare, can cost about $150 to $200 a month in premium for that type of coverage. So that's pretty hefty, but like I said, that supplemental coverage really fills in a lot of the holes so that you don't have surprises then when you go to the doctor with that type of coverage. However, if you go with Medicare Advantage, which takes Part A and Part B, but then combines another policy, Medicare Advantage, which usually has drug prescription coverage and similar supplemental type coverage. I just talked with a client this morning that signed up for their Medicare Advantage policy for $26 a month. So if you're on Medicare Advantage, you're not paying anything for Part A, you're paying $144 for Part B, and then your Medicare Advantage policy on top of that is about $26 a month is what I've been seeing lately. That opposed to original Medicare, where you're paying the $144 a month for Part B and $40 a month for Part D. So let's say you're up to about $190. Add a supplemental policy on that, you might be around $375 a month when you add all that together just for the premium compared to Medicare Advantage. So you're really saving maybe close to $150 to $200 a month by being on Medicare Advantage, but Medicare Advantage isn't quite as comprehensive, although it's hard for me to go into more detail than that because there are various types of policies, and then it depends on what your health conditions are and what you're looking for. But in the midst of all this, I got in a decent amount of detail here. You see, one of the first decisions you'll make is whether you want to go with original Medicare or Medicare Advantage, and then that's what each of those options entails in this slide. Okay, Medicare enrollment. Now, one of the most important things that we're going to talk about today is really when to apply for Medicare, because for some of you, this might be pretty easy. For some of you, this might be a little bit more complex. But the basic principle of enrollment is unless you are covered by an employer group plan that covers 20 or more employees, you must enroll in Medicare when you turn 65. So if you are retired, let's say you retired at 63, and you've got some sort of other health insurance coverage, but as you're getting to age 65 and you're retired, you definitely need to sign up for Medicare. And then depending on what you decide, original Medicare, Medicare Advantage, or whatever, that process needs to get started and implemented as you turn age 65. However, one thing that I've learned or I've seen quite a bit within your organization is a number of people do seem to work past the age of 65 at the medical college. And so what does that mean for you? Because the medical college employs certainly more than 20 employees who are also in the employer-based plan, if you are working past age 65 at the medical college, do not need to sign up for Medicare by age 65. Why is that? Well, because you're covered under your current plan. You could switch over to Medicare if you want, but you are not mandated to do so. So if you work until age 70 at the medical college, you really don't need to do anything except maybe inform the Medicare system that, yes, I acknowledge that I'm turning 65, but I am choosing to stay with my employer plan while I'm still employed there. And you could keep it that way until you're 70 and not really have to do much with Medicare. So that's the one main exception to the age 65 rule, is if you're continuing to work. And this includes your spouse as well. If they're over the age of 65, but they're on your medical college plan and you're continuing to work, they do not have to sign up for Medicare either. That choice is up to them. What if you don't enroll in Medicare on time? Well, there's a number of consequences there, and these are really pretty steep. I'm not going to get into what the penalties are because hopefully you never have to face them. In fact, let me just tell you do not want to be subject to the late enrollment penalties with Medicare. So make sure in light of your situation that you are signing up for Medicare when you need to. Also, your healthcare expenses may not be covered by insurance. If you don't sign up for Medicare at the proper time and you delay it until later, there might be some coverages that you may no longer be able to get under Medicare, and so your coverage might be hurt substantially by the fact that you didn't sign up for Medicare on time. Also, for your private insurance options under Part D, under Medicare Advantage, and so on, those things may also disappear as options if you don't sign up on time. So If there's nothing else that you get out of this talk today, it's the fact that you really need to be on top of signing up for Medicare whenever your individual situation mandates it. So make sure that you don't end up being late on that. How do you enroll in Medicare? If you're receiving Social Security and it's time to go on Medicare, they will automatically put you into Medicare. In fact, they'll send you your red, white, and blue Medicare card, even though you didn't ask for it. And what they'll do is they'll automatically, if they haven't heard from you, they'll automatically put you into Part A and Part B, and then they'll take the Medicare premiums, $144.60 this year, right out of your Social Security check if you've already are receiving it. Coverage then starts the first of the month as you turn age 65. Part C, Medicare Advantage, and Part D, your prescription drug coverage, are not automatic. And so those are things that you have to do separately. And like I stated earlier, that does not get done through the government. You sign up for those options directly with an insurance company that provides those types of programs. If you are not receiving Social Security when you turn 65, then you still have to go to, if you're signing up for Medicare, you still have to go on your own aside from, if you're deciding to delay your Social Security benefit until you're 70 years old, you still have to go through the Social Security Administration in order to set up for Medicare. And then there's three important enrollment periods. There's the initial enrollment, the special enrollment, and the general enrollment. So let's cover those. This is a chart that shows you the initial enrollment period. The initial enrollment period is for people that are signing up for Medicare at age 65. So they may not be working past 65, and so then they need to sign up for Medicare. That's the initial enrollment period. So you see in the middle of this chart here, it lays out the month that you turn age 65. So for 3 months prior to that, that's when you ideally want to be signing up for Medicare. So kind of put that in the back of your mind that the month that you turn age 65, back up 3 months, and that's when you want to be signing up for Medicare. It explains at the bottom there, sign up early to avoid a delay in getting coverage for Part B services. To get Part B coverage the month you turn 65, you must sign up during these 3 months prior. So the 3 months prior to age 65, if you sign up for Medicare, you're fine, then nothing to worry about. However, for the initial enrollment period, if you don't get signed up the 3 months prior or within the 3 months prior to age 65, you still have 3 months after that that you can sign up. There is a small consequence to that, again stated there in the blue. If you wait until the last 4 months of your initial enrollment period to sign up for Part B, your coverage date actually would be delayed. So let's say you are delaying your registration for Medicare and it's 2 months after you turn 65, there'd be a gap or a delay of your coverage starting, which probably isn't a big deal, but you don't want to tempt fate either, where if something, heaven forbid, happened to you within that gap period, then you might not actually be covered for a health condition that could come up. So again, the moral of the story is sign up in the 3 months prior to age 65, with the exception if you're working past the age of 65 at the medical college, you do not need to sign up for Medicare. Still might be good to let them know your intentions there, but then you're okay. And then that puts you not in the initial enrollment period, but that puts you into the special enrollment period. I'm skipping through slides where I've covered that in my remarks so far. But if you are working past the age of 65 and then let's say you're going to have your retirement at age 68, what you want to do is sign up for Medicare prior to your termination date, your retirement date, because if you do it again prior to that, then you're going to be fine, and then you don't have anything to worry about. Now, the special enrollment period, you still have the 8-month period starting the month that your group coverage ends. So if you're retiring from the medical college at age 68 and you don't have your Medicare in place, you still, in this enrollment period, have 8 months after that to get your coverage started. I'm not sure why you would want to delay that exactly, because you're probably going to have to pay COBRA costs for medical coverage between your termination date and when Medicare starts, and that can be kind of expensive. So again, if you know that you're going to be retiring on your 68th birthday, then for a couple months prior to your 68th birthday, get signed up for Medicare so that you don't have any problems. That 8-month period is for Part B, but then if you're signing up for Part D, you have, instead of 8 months, you have 63 days after your employer coverage ends in order to sign up for Part D. Again, if you handle all of that before your termination date, then you have nothing to worry about. That's the special enrollment period. The best time to enroll in Medicare to avoid late enrollment penalties and any coverage gaps is to sign up during the initial enrollment period, which is for people signing up by age 65, or the special enrollment period, which is people working and covered after the age of 65. Then you go to the enrollment period as your employment terminates. To avoid gaps in coverage, sign up before. You will never go wrong by signing up before your coverage ends, and then you'll be in good shape. The general enrollment period is exactly the place that you do not want to be, because you end up in the general enrollment period if you did not sign up when you were supposed to. Again, you're subject to big penalties, financial penalties, and let's not go into those, because don't be subject to those, and it gets a little bit complicated there, but just don't be subject to the general enrollment period, and then you'll be fine. It's not only the financial penalties, but if you realize, let's say in June, that you were supposed to sign up for Medicare already and you didn't, now you're in the general enrollment period, and if you're in June, your coverage may not start for a year yet, depending on how quickly you can get that done. But if you're in June, the months you can actually sign up are only January, February, and March. So you realize this problem in June, you have to go the rest of the year without Medicare coverage. Then you sign up in one of those months, January, February, or March, your coverage still doesn't begin until July 1st. So my scenario that I'm describing, you realize this, but you still are not going to be covered by Medicare in that scenario for 12 months yet. You're really putting yourself in a difficult situation financially and medically in terms of your Medicare coverage. So please, please, please don't let this happen where you end up in the general enrollment period, because that does have significant consequences. This is a review of all the enrollment periods. The initial enrollment is if you're signing up at age 65 and you're retired. The special enrollment is for people signing up after the age of 65, but they're still covered by an employer plan that has more than 20 employees in it. And then again, the general enrollment period is for people who missed when they really should have signed up, and that has significant consequences. Kind of like this flow chart because it gives you a bit of an idea as to what your situation is and how this should flow. So at the top, ask yourself, will you or your spouse keep working after the age of 65? For many of you at the medical college, maybe that's the case, so you say yes. Then on the left-hand side, does your employer plan cover more than 20 employees? The answer is yes, so then you move to the box underneath it. Is it a good plan? Do costs and benefits compare favorably to Medicare? In my opinion, at the medical college, that's certainly a yes. So then you move down, no need to enroll in Medicare until retirement, but call the Social Security Administration just to confirm your intentions. And if you are contributing to an HSA, do not enroll in Part A. We're not going to spend a lot of time in this, but health savings accounts, or HSAs, are becoming more and more popular as part of employer plans. You do need to be careful with that if you're over the age of 65. If you have questions or issues with that, then maybe contact me, and I've got the information at the end here where you can do that, but be careful there. But I'm not going to go through each one of these situations, but this gives you a bit of a flow here as to how you can make those decisions and what might be best for you. How do you actually sign up for Medicare? There's 3 ways. You can go to www.ssa.gov and apply for Medicare benefits there. You can call Social Security at that 800 number, or you can also gain a lot more general information about Medicare at that website as well. I'm adding a third option here, which some of you may live in pretty close proximity to a Social Security office. So I'm still a person that likes to deal with people face-to-face and ask questions and so on. And my preference would be to go to a Social Security office and meet with somebody there that can answer my questions directly and then get that taken care of for me right in front of me. So a couple of different ways to get signed up for Medicare. Okay, how to sign up for, how to sign up for some of these points of Medicare. So first of all, again, you have to decide whether you're going to be going with original Medicare or not, or go with Medicare Advantage instead. If you're going with original Medicare, then you do need to shop on your own for a prescription drug plan, Part D, and that's done through private insurers. However, I will say on the Medicare website, if you have a list of your prescription drugs that you already know of or that you are taking, on the website, you can get a lot of real specific information where they will help to steer you towards what private insurance company you might want to buy your Part D through, depending on your individual situation. So I definitely encourage you to go out to Medicare.gov and explore some of those tools and guidance that they give you there. If you are enrolling in Medicare Advantage with drug coverage, then it's pretty similar. You're still choosing private insurance plans set up within the Medicare requirements, and those can differ quite a bit from each other, although there are standard things that they have to do that Medicare mandates. Medicare and private insurance. So as far as out-of-pocket costs that are paid by you, the Medicare beneficiaries, we already talked about Part B premiums. That's the $144.60, so you need to pay for that. If you're paying for private insurance premiums, again, on average for Part D, it's about $40, but actually, like I said, I've seen some things quite a bit cheaper lately. And then if you go with Medicare Advantage, that's going to be probably $25 to $30 a month. Other out-of-pocket costs, there are deductibles, there are a portion of doctor bills not paid by Medicare, and there are services that are not covered by Medicare, and that's specific to your situation, but that's more than what we can cover in the time that we have today. Medicare premiums, I mentioned Part A is free, as long as you have the working record or a spouse has a working record similar to Social Security eligibility. Part B, $144.60 a month, we talked about that, and Part D, again, is from the private insurer, so it depends on what their premiums are, close to $40 a month. Now, one of the things that surprises a lot of people is if they are going to have some income set up in retirement that puts them into higher income ranges, there is a problem with Medicare because actually there are means testing that happens with Medicare. So if you're married filing a joint return, and if your modified adjusted gross income is, let's say, $200,000, that puts you in this row. What that means is your Medicare Part B is no longer $144.60. It is now $57.80. And on top of that, if your Part D is about $40, they're going to bump that up $12.20. So instead of paying $184 for your Part B and your Part D, you'd be paying $254.60. So you're going to get penalized the more income that you have. Now you might say, well, I don't plan on actually having more than $174,000 in income in retirement, which might very well be the case, but oftentimes I see with people, once we turn on to full Social Security benefits, maybe if you have a pension benefit, then on top of that, what surprises people, and many of you know this, the government mandates once you turn not 70 and a half anymore, it's now age 72, but once you turn 72, whether you want it or not, the IRS requires you to be taking money out of your IRA accounts, your 403B accounts, your 401k accounts, which is called the required minimum distribution. So you still might not be affected by this at age 72, but required minimum distributions go up every year. And as that gets bigger and bigger and bigger, you might be surprised what your actual taxable income is as you continue to go throughout retirement, then making you subject to Medicare premium increases just simply because of how much money you make. So that takes some forecasting and some planning and thinking through all of that, but I wanted this slide to be in here so that you're aware if your income is too large in retirement, you might get penalized with higher Medicare premiums in the future. Deductibles, Part A, which again is hospitalization. So per illness, per hospitalization stay, you have to pay the first $1,408 before the Medicare coverage kicks in. Part B, which again are your regular doctor visits and so on, that's pretty small, $198 a year you need to pay, and then Part B coverage kicks in. And Part D, your prescription drug benefit, does require that you pay the first $435 in the year before Part D kicks in. Coinsurance, I don't want to spend a whole lot of time on this because, again, there's a lot of different pieces of information there that we don't necessarily have time for today. So I'm going to move through that. We're talking about coinsurance with Part D as well. Medicare coverage, Part A, basically once you're past your deductible, then 100% of your hospitalization is covered for the first 60 days. Your other medical services, regular doctor visits, that's 80%, but there is a Medicare approved amount. And then also there are some preventative services like flu shots and so on that are covered there as well. This booklet, Medicare and You can call this phone number or go to medicare.gov and get this information. Every single one of you should be getting Medicare and You, which is kind of a big book, but it's very well done in my opinion, that shows you what the coverages are and how that might pertain to your individual situation. So please make sure that you get that resource. There are a number of things that Medicare does not cover, and that includes long-term care. So if you go into a nursing home, Medicare isn't going to help you all of that much for that type of care. If you go outside of the United States and you're looking to get medical attention in another country, Medicare is not going to pay for that. Dental care, vision, hearing aids, cosmetic surgery, acupuncture, amounts over the Medicare approved amount, and also amounts not covered by deductibles and coinsurance. But private insurance may cover in full or part, and so this is the parts where we've talked about with other things like Medicare Advantage and the supplemental policy is they'll pay your Part A deductible. They'll cover your hospital costs after 60 days. They'll cover the 20% of doctor bills that Medicare Part B does not cover and amounts that the doctor charges over the Medicare approved amount. So again, it fills in the holes, whether it's Medicare Advantage or a supplemental policy. That's where those things come in, including prescription drugs as well. Medicare supplement insurance, so that covers those things. Private health insurance for individuals, it's sold by insurance companies, and it is a supplement to the other parts of Medicare where those things don't cover. Medigap, again, which is supplemental policies. We've talked about that quite a bit. You pay a monthly premium, going to be between $150 to $200. You would not have a supplemental policy in conjunction with a Medicare Advantage policy. It's one or the other. Medicare Advantage, we talked a decent amount about. It is interesting, I'm seeing more Medicare Advantages that are picking up vision and dental coverage. And so that is there as well. But again, these are run by private insurance companies and are meant to work in addition to Part A and Part B. And a lot of them include prescription drug coverage as well. So a big part of your job, and this is not a, well, it does certainly take some time and some effort, but not only is it prudent to thoroughly look at what a number of private insurers provide with these policies, Medigap, supplemental, and so on, but their policies can change from year to year. And so don't just assume that once you go into a Part D prescription drug policy or a supplemental policy or Medicare Advantage, don't assume that once you're in there that there's nothing you need to worry about, because actually those things do change on a regular basis. And so it is prudent to shop those policies on an annual basis. Okay, final word on healthcare costs and retirement. You don't need me to tell you that all of these costs are going up rather high. The insurance premiums to the costs of the service themselves, to all of those things, generally a lot of those things when I plan with my clients, we plan for those things to go up probably 4 to 6% each year, which is pretty much double or close to double regular inflation within our economy. So that's the challenge. The change in your health status might also require that you continue to look at different options on a year-to-year basis. A couple of years ago, Fidelity in particular, in order to help people to plan for healthcare costs, said that at the beginning of your retirement, whatever you have saved up for retirement, plan on about $285,000 going to your healthcare expenses in retirement. So if you have $700,000 saved up in your 403B, plan on about $285,000 and the growth on that going towards your medical expenses, from premiums to copays to deductibles to out-of-pocket costs in retirement. So the need is pretty challenging. I have a couple of things in here on long-term care, but I am going to step aside from that, and I'll wrap up with just 3 reminders, and then we'll get to your questions. So reminder number 1, if it's a surprise to you at this point that I'm saying one of the most important things for you to do is enroll in Medicare on time, then I didn't do my good job as a teacher. Enroll in Medicare on time. That's the most important thing, so make sure that you know what your individual situation is there. Number 2, shop carefully for private insurance to go with Medicare, and this is something that should be done every year and reviewed to make sure that you are in the best plan for you. Reminder number 3, plan for higher healthcare costs in retirement. They're not going down, they're only going to be going up. And so making sure that your retirement can absorb those costs is an important part of planning. So Terry, that covers the material. So how are we looking on questions?
We've got a couple of questions here, Mark. So the first one is fairly simple. They are asking if the slides would be available to them. If you'd be able to provide those slides, I can always email them to the individuals.
Yeah, let's you and I coordinate that, and I think yeah, to email that and make them available. I might have to. Anything that I do and hand out has compliance review with it, so I'll go through that process, and then we can make the slides available.
Okay, that sounds good. Then the next question is, do you shop for Medicare Advantage through ssa.gov? And how is shopping for an Advantage plan different than the original plan?
Good question. There is going to be some stuff out on Medicare.gov. What I would do in your situation in particular is all of this is quite overwhelming and the decisions can be rather difficult. What I would do if I'm actually shopping for Medicare Advantage, yeah, I can look at a number of things online, but frankly, and I'm not necessarily seeing a big downside to this, is I would get in front of somebody that specializes in providing those types of policies. In other words, I would go to an insurance person that represents a number of Medicare Advantage policies or Part D and so on, and then go with them. If that person is good and qualified, they will take your list of prescriptions, they will take your health conditions, and then they will do a lot of the legwork for you, especially in this area, because those plans are specific even to what county you live in. So finding somebody that's very knowledgeable in those areas. I'm licensed to sell those policies. I don't do them because I don't feel like I have the time to adequately actually shop all of that. My role is more in investment and financial planning. So I'd be going to an individual that has a number of years of experience in that area to help me to shop and know what's really available and what might be best for me. That's especially for Medicare Advantage. That's especially for a supplemental policy. But if you're going with original Medicare, I would definitely be having a Part D conversation with that individual as well.
Okay, that was helpful, very helpful. Next question is, how do I shop for a Part D plan if I am not currently taking any prescription medications? I thought about senior care, but the application form is asking for income sources. I'm not sure how to predict what my income will be.
Yeah, so then they'll basically go with your current income, or then they'll be collecting Social Security information and then asking you also if you're expecting a pension. So Part D, even if you're not, this brings up a really important point, so I'm really glad about this question. If you're not taking any medications, you're signing up for Medicare, but if you're not taking medications, then you might ask yourself, why go with Plan D? I would still purchase a Plan D because here's the thing, 4 months after that, you get diagnosed with a certain medical condition, and it appears now that you're going to have to be on a prescription drug indefinitely. You want to be on Plan D already to help you to cover that, where delaying Part D and then applying for that after you've been diagnosed with the condition might severely hinder whether you're going to qualify for that Part D coverage. So my blanket and yet passionate plea to you is still go ahead and sign up for Part D. It might cost you as little as $15, $20, at most $40 a month, but then you have it because you would rather have it when you need it than to try and have to get it later on. As far as the senior care and so on, I'm not real versed in the qualifications there and so on. I don't know if I can shed a whole lot of light on that, but you know, if you have a decent sized retirement plan which you're going to have to take money out of in the future, and a pension plan on top of nice Social Security benefits that might be hard to qualify.
Okay. Let's see. If retiring from MCW, does MCW offer a supplemental coverage that can be used with Medicare Part A and B? And Mark Lash is also on the call, and correct me if I'm wrong, Mark. There is an option to get continuation of the current coverage that you have through MCW, but it's based on your years of service. You have to be between the ages of 55 and 64 with at least 10 years of continuous service, and then you might be eligible for the health and dental coverage beyond the 18 months, which is standard for COBRA. So COBRA, as many of you probably already know, is quite expensive. But that gives you, a potential option. If you've got 10 to 14 years of service, for example, you can do that continuation of for years of coverage up to 4 years. It's just that COBRA is quite costly. So you really want to think about that and maybe look into other options as well. So I don't know if, Mark, you have anything to add on that?
Yeah, what I would add to that, Terry, is that the MCW insurance coverage that you can continue after you leave here only goes up to age 65, because that is when Medicare is available and kicks in. So you can't continue it beyond age 65. So I think the question is asking if MCW offers supplemental coverage that can be used with Medicare. And the answer would be no. That the supplemental coverage, and Mark Wilderman would know more, is it's an insurance company issuing it, not an employer. So we're not an insurance company. We don't have insurance coverage for that would attach to Medicare.
Right. That's correct. Thanks for that clarification, Mark. That's absolutely correct.
It's extremely rare that any employer would be setting up or offering any sort of supplemental coverage after employment has been terminated. I mean, I've seen it out there, but it's extremely rare. So once you've terminated employment, then the key for you is to get set up in the proper Medicare situation that works well for you, and, including a lot of what we've talked about today.
Okay, it looks like we have one last question. Can you start with a traditional plan or path and later switch to Medicare Advantage, or vice versa?
The answer to that question is yes, you can, but be extremely careful. So where that question commonly comes up is if people go Medicare Advantage and do so, like a third of Americans have, because the premiums are cheaper. But if you develop a medical condition, then where it might be better to be under original Medicare, that's where oftentimes this question is asked. The answer is yes, you can, but the drawback is because you are on Medicare Advantage first and then you're going to original Medicare, there are some conditions that your supplemental policy insurers might turn you down for. They can't turn you down if you sign up for original Medicare initially at age 65. There's no pre-existing conditions and so on that they can deny you for. But if you start out on Medicare Advantage and heaven forbid you get cancer and now you want to switch over to original Medicare, it might be tricky to get the full coverage of original Medicare, but that's going to hinge on what condition it is that you have that maybe brought about your interest in switching to original Medicare. So can you do it? Yes. That's not the question. The question is what might that newer policy setup cover and what might it not cover? But that's specific to you and your situation. So be careful, because some people might say, why wouldn't I start off with Medicare Advantage? I can always go original Medicare later on. It might have some drawbacks.
Okay, I just want to make everybody aware, we also have something on InfoScope that's a page specifically called Preparing for Retirement. And one of the things that's listed on there, there's a nice checklist, some other, handbooks and such. But there's also, we have agreements with two full service insurance agencies to assist all faculty and staff looking towards retirement to understand a little bit. If you have more questions on Medicare, I think you've got a lot answered here today. But supplemental health insurance, long-term care insurance, life insurance. There's two services listed out there, Allied Senior Services and FHK Insurance. And those are services that we, have been able to offer you to work with. So if you're interested or want more, want me to send you the link for that, I can definitely do that. Just email me and I'm happy to share that. The other thing I wanted to mention to everyone, Mark is kind enough to do another session for us that's happening next Tuesday, July 21st, from noon to 1 again. And it's how will the recent tax changes affect your retirement? And that's a brand new session that we're doing, because there's been so much going on this year. This has been quite a challenging year for people in many ways, but not only that, tax-wise and with what's happening. So you can sign up the same way you signed up for this session, but wanted to make you aware of that. I don't know if you have any final pieces of information, Mark. You've got your contact information up there, but I'm happy to let you close it out.
Sure. Well, thanks again for letting me participate, and I trust that there is some information in this that's helpful. I've got my contact information there. Please feel free to give me a call or send me an email with other questions. I do invite people to come in and see me. I'm a financial advisor, which means I do financial planning and investment management. But I offer to people in presentations like this, come in and see me. I'm not going to talk about investments or anything like that if you don't want, but I will give you a Medicare assessment that is designed to help you to steer in the direction that would be helpful for you, to give you a little bit more insight. It doesn't cost you anything, doesn't obligate you to anything. It's just a quick appointment that people come into the office and they find that really helpful. We might get into other discussions there. That's fine. That's entirely up to you though, because I will just limit my conversation to Medicare issues to help steer you in the right direction. So give me a call, send me an email if you're interested in that. Otherwise, again, I trust that this was helpful and I really enjoyed spending this time with you today.
Okay, wonderful. Thanks so much, Mark. Again, if you have questions, you can reach out to Mark or you can email wellness@mcw.edu and I will be happy to find information for you. And have a wonderful afternoon, everyone. We appreciate your attendance today.
Thank you very much.